They told you the bailout cost $700 billion. That's what they put on television. What they debated in Congress, what they sold to the American people as the price of saving civilization, 700 billion TARP, the Troubled Asset Relief Program, emergency legislation to prevent economic Armageddon. And you accepted it, held your nose, swallowed the bitter pill, because they said there was no choice. But here's what they didn't tell you. 700 billion was a lie. Fraction, a distraction. While Congress debated that number publicly, the Federal Reserve was secretly printing $16 trillion. $16 trillion, and handing it to banks. Not American banks exclusively, global banks, foreign central banks, hedge funds, corporations that weren't even financial institutions, all in secret, all without congressional approval, all without your knowledge. And while they were getting 16 trillion in free money, you were getting foreclosed. 8 million Americans lost their homes. 8 million lost their jobs. $50 trillion in global wealth evaporated. Retirement accounts cut in half. College funds destroyed. Life savings vaporized. And the banks responsible. They got richer, way richer, because the bailout wasn't a rescue. It was a heist. The greatest transfer of wealth from the poor and middle class to the financial elite in human history, and they did it right in front of you while calling it salvation. But to understand the crime, you need to understand how they set it up, how they created a crisis so catastrophic that bailouts would seem inevitable, how they built a system designed to fail and profit from the failure. 2001, America is reeling from the dot-com crash, 9/11 recession. The Federal Reserve, led by Alan Greenspan, decides to stimulate the economy. They lower interest rates way down to 1%, the lowest in decades. And suddenly, borrowing money becomes almost free. People who couldn't afford homes before can now get mortgages. Not because their income increased, because money got cheap. And the banks, they see an opportunity. If interest rates are low and people want to borrow and housing prices keep rising, why not lend to everyone? It doesn't matter if they can qualify, doesn't matter if they can afford payments, because housing prices always go up, right? And if they default, the bank just takes the house, which is worth more now than when they loaned the money. It's a can't-lose proposition, except it's built on a lie. Housing prices don't always go up. They're not immune to gravity, but the banks convinced themselves otherwise, convinced regulators, convinced rating agencies, convinced everyone. And they started lending with abandoned subprime mortgages, ninja loans, no income, no job, no assets. Liar loans where borrowers could state any income without verification. Adjustable rate mortgages with teaser rates that would explode. Later, interest-only loans, negative amortization loans where the principal actually increased every month. Every predatory product imaginable, all designed to get people into homes they couldn't afford. Because the banks weren't planning to hold these mortgages, they were planning to sell them. This is where it gets diabolical. In the old days, banks made loans and kept them. If the Brahara defaulted, the bank lost money. So banks were careful, conservative. They only loaned to people who could pay back. But Wall Street invented something new. Securitization. The ability to take thousands of individual mortgages, bundle them together, and sell them as securities. Mortgage-backed securities. And suddenly, the bank making the loan doesn't care if the borrower can pay because they're selling the risk to someone else. Who's buying these mortgage-backed securities? Everyone. Pension funds, insurance companies, foreign governments, other banks, hedge funds. All told, these are errated investments, safe as government bonds, backed by the full faith and credit of American real estate, which never goes down in value, except they're not AAA, they're toxic. Filled with loans to people who will never pay, but the rating agencies, Moody's, Standard & Poor's, Fitch, they rate them AAA anyway. Why? Because the banks pay them too. It's a corrupt system where the people being evaluated pay the and everyone makes money as long as housing prices keep rising. But it gets worse because Wall Street doesn't stop at mortgage-backed securities. They create collateralized debt obligations. These are securities made from other securities. Take the worst tranches of mortgage-backed securities, the ones nobody wants, bundle them together, and magically they become it's financial alchemy. turning garbage into gold through mathematical fraud. And then they create synthetic CD derivatives that don't even contain real mortgages, just baits on whether other CDOs will fail. It's a casino. Building towers is speculation on a foundation of subprime mortgages to people who can't afford them. And every layer generates fees, billions in fees. The bankers get massive bonuses, record profits, and everyone celebrates the housing boom. Would you trust a system where the people packaging the garbage are the same people rating it safe and the same people selling it to your pension fund? Because that's what this was. Fraud, systematic, institutionalized, legal. 2006, housing prices peak, then they stop rising, and that's all it takes. The entire edifice was built on continuous appreciation. When prices plateau, mortgages start defaulting, especially the adjustable rate ones. The ones with teaser rates that reset higher. People who could barely afford the introductory payments suddenly face doubled payments. They default en masse 2007. The defaults accelerate. Subprime lenders start collapsing. New Century Financial, American Home Mortgage, dozens of smaller firms. And the mortgage-backed securities start losing value because they're backed by mortgages that aren't being paid. And the CDO is built on those securities. Also losing value rapidly. Bear Stearns has the hedge funds that invested heavily in subprime CDO. In June 2007, they collapse, completely wiped out. And Bear Stearns tries to hide it, tries to contain it, but the word gets out. If Bear Stearns, one of the premier investment banks, has massive losses, who else do I? Everyone. That's who. Every major bank bought these securities. Every investment bank created them. Every insurance company insured them. The entire financial system is interconnected through subprime mortgages and the derivatives built on them. And as the defaults rise, the whole structure starts cracking. August 2007, French bank BNP Paribas freezes withdrawals from 3 investment funds. Can't value the assets, can't determine what they're worth. Credit markets seize. Banks stop lending to each other because nobody knows who's holding the toxic waste, who's next to collapse. Trust disappears. And without trust, the financial system can't function. The Federal Reserve starts emergency interventions, lowering rates, injecting liquidity. But it's not working. The crisis is too big, too widespread, too interconnected. And in March 2008, Bear Stearns runs out of money, not bankrupt on paper, just unable to access cash. Because in modern finance, banks don't keep much cash. They rely on overnight lending, borrowing money each night to fund operations. And when the crisis hit, nobody would lend to Bear Stearns anymore. The firm had 85 years of history, survived the Great Depression, but it couldn't survive 3 days without overnight lending. The Federal Reserve arranges a fire sale. JP Morgan buys Bear Stearns for $2 per share. The government guarantees $30 billion in losses, prevents total collapse. Everyone breathes a sigh of relief. Crises averted, right? Wrong. Because Bear Stearns was a warning shot, the real catastrophe was coming. September 2008. Lehman Brothers, 158 years old. Survived the Civil War, survived 2 world wars, survived every financial crisis in American history, $600 billion in assets, but also $600 billion in debt and trillions in derivative obligations. When Lehman asks for emergency funding, the government says no. Treasury Secretary Henry Paulson, former CEO of Goldman Sachs, he decides to let Lehman fail. Teach Wall Street a lesson. Show that not everyone gets bailed out. Show that consequences exist. It's the worst decision in financial regulatory history. September 15, 2008, Lehman Brothers files for bankruptcy. The largest bankruptcy in American history. And the shockwave is immediate, catastrophic, global. Because Lehman wasn't just a bank. It was a counterparty to thousands of derivative contracts involving trillions of dollars with every major financial institution on earth. And when Lehman dies, all those contracts become worthless. Simultaneously, AIG, the insurance giant, it had sold hundreds of billions in credit default swaps, insurance on mortgage-backed securities. When Lehman fails, all those swaps activate. Everyone demands payment. and A doesn't have the money. The company is hours from bankruptcy, which would trigger derivative failures across the entire global financial system, which would end modern civilization. Paulson, who let Lehman fail, now faces a choice. Let AIG fail and watch the world economy collapse, or bail them out. He bails them out $85 billion from the Federal Reserve. No congressional approval, no debate, just here's $85 billion. Save the system, but it's not enough. The contagion is spreading. Washington Mutual fails. Wachovia fails. Merrill Lynch requires emergency absorption by Bank of America. Morgan Stanley teetering, Goldman Sachs desperate. The entire investment banking model is dying. And the commercial banks, they're next because they all bought the same toxic securities. They're all interconnected through the same derivative contracts. When one falls, they all fall. Paulson goes to Congress, demands $700 billion, TARP, to buy toxic assets from banks, prevent complete meltdown. He literally tells lawmakers that without this money, there will be martial law within days. No exaggeration. Actual collapse of government function. Congress initially votes no. The stock market crashes 777 points in a single day, the largest point drop in history. Congress votes again. This time, if your heart is racing, if you're feeling that visceral understanding of how close we came to total collapse, then you're ready for the real revelation. Hit subscribe now, because what happens next is the part that kept secret. The part that makes $700 billion look like pocket change. The $700 billion was public debated, transparent, sort of. But while that was happening, the Federal Reserve was conducting a secret operation. They didn't call it a bailout. They called it emergency lending. Liquidity provision, temporary support, but it was a bailout, the biggest in history. And they hid it from everyone. The Federal Reserve Act gives the Fed emergency powers. Section 30, in unusual and exigent circumstances, they can lend to anyone. Without congressional approval, without public disclosure. And from late 2007 through 2010, they used up power to print $16 trillion, $16 trillion and hand it to banks, not just American banks. Global banks, Deutsche Bank got billions, Royal Bank of Scotland, Barclays, Swiss banks, French banks, Japanese banks. The Federal Reserve America's central bank was bailing out the entire global financial system in secret. And this wasn't disclosed until 2011, after Congress forced a limited audit. And even then, the Fed fought to keep the details hidden. Who got the money? $2.5 trillion. Bank of America, $1.3 trillion. Morgan Stanley, $2 trillion. Goldman Sachs, $800 billion. Wells Fargo, $500 billion. JP Morgan, $400 billion. The numbers are staggering. Individual loans of hundreds of billions rolled over, extended, renewed 4 years. But it wasn't just banks. General Electric got billions. Harley-Davidson, Caterpillar, Toyota, corporations with financing arms that faced funding crunches. The Fed loaned to everyone, and the terms, essentially zero interest. They borrowed at fractions of a percent, money created from nothing. Loaned to failing institutions, so they could pretend to be solvent. And what did you get? What did the homeowner facing foreclosure receive? What support did the unemployed factory worker access? What emergency lending did the small business owner get when they couldn't make payroll? Nothing. Zero. The Federal Reserve's emergency powers weren't available to you only two banks. Only two corporations. Only to the institutions that caused the crisis. Does this seem like justice? Does this seem like a system serving the people? Or does it seem like exactly what it is? A wealth transfer mechanism disguised as economic policy. But it gets worse, because the banks that got $16 trillion in emergency loans, they were simultaneously foreclosing on American homeowners, taking their houses, evicting families, often illegally, through robo-signing. Fraudulent documentation, perjured affidavits. The banks would foreclose without proper paperwork, forge signatures, file false legal documents, commit crimes to steal homes faster. And when they got caught, slap on the wrist, fines that were tiny compared to the profits bank. Avez America. Wells Fargo, JP Morgan, Citigroup, they all participated in foreclosure fraud, all got caught, all paid settlements that sound large, tens of billions, but were actually tiny because they'd made hundreds of billions in profit. And nobody went to jail, not one banker, not one executive, not one person responsible for the fraud, the crisis, the foreclosures, the destruction of wealth, zero prosecutions. Attorney General Eric Holder literally testified to Congress that some banks are too large to prosecute, that criminal charges would destabilize the financial system. So the Justice Department didn't even try. They settled civil penalties, fines paid by shareholders, while the executives kept their bonuses, their jobs, their freedom. Meanwhile, 8 million Americans lost their homes. Foreclosure notices, sheriff's sales, families evicted, children displaced, neighborhoods destroyed, entire communities gutted, and the banks that received $16 trillion in bailouts. They bought those foreclosed properties at auction prices, acquired assets at Depression-era valuations using money the government gave them for free. It's feudalism, transferring land from peasants to lords, using a crisis the lords created and a government that serves their interests. Would you call this a rescue or a robbery? The 2008 crisis wasn't a natural disaster. It was manufactured. The banks created the toxic securities. The rating agencies blessed them. The regulators allowed it. And when it collapsed, it was designed to collapse. The banks got bailed out while you got destroyed. It's not a bug. It's a feature. The system working exactly as intended. And what changed after 2008? What reforms prevented this from happening again? A 2,000-page law that accomplished almost nothing. Some increased capital requirements, some new oversight, but no separation of commercial and investment banking. No breakup of two big institutions, no criminal prosecutions, no structural change. The banks got bigger. JP Morgan Chase absorbed Bear Stearns and Washington Mutual. Bank of America absorbed Merrill Lynch, and countrywide, Wells Fargo absorbed what? The crisis didn't break up concentrated power. It concentrated it further. And now those banks, the ones that failed, that required bailouts, that committed fraud, they're larger than in 2008, more powerful, more systemic, more dangerous. And the Federal Reserve, it kept printing quantitative easing, QE1, QE2, QE3, trillions more created from nothing to buy government bonds and mortgage-backed securities, keeping interest rates at zero for 7 years, inflating asset prices, making the rich richer. Because when you print trillions and hand it to banks at zero interest, they don't lend it to small businesses or consumers. They buy stocks, real estate, assets, driving prices higher, making assets unaffordable for ordinary people while enriching those who already owned them. The wealth gap exploded after 2008. The rich recovered completely within 2 years. The middle class still hasn't recovered, still earning less in real terms than before the crisis, still buried in debt, still struggling with cost of living that rises faster than wages, while billionaires added trillions to their net worth. Because the bailouts weren't designed to help you, they were designed to protect wealth, and they succeeded perfectly. Here's the truth they don't want you to understand. 2008 wasn't a failure of capitalism. It was capitalism working exactly as designed in the modern era. Privatized profits, socialized losses, let the wealthy gamble with unlimited leverage, and when the bets fail, force taxpayers to cover the losses. It's a one-way system. Heads they win, tails you lose, and it's still happening right now. The banks are gambling again. Larger bets, higher leverage, more complex derivatives. The same executor is making the same decisions because they learned the ultimate lesson from 2008. You can commit fraud, destroy the economy, ruin millions of lives, and not only avoid punishment, but get rewarded. Bailouts, bonuses, promotions, power. Do you think they'll behave differently next time? Do you think they've suddenly discovered ethics? Do you think the system that rewarded destruction will somehow produce different outcomes? Or do you think they're doing exactly what worked? Before building another bubble, planning another crisis, preparing another bailout. The signs are everywhere. Corporate debt at record levels, private equity leverage at record highs, derivatives markets larger than in 2008, and the Federal Reserve, they kept interest rates low for over a decade, printed over $8 trillion, inflated every asset class, and now they're raising rates, tightening, pulling liquidity out of the system, just like they did before 2008, creating the conditions for collapse. And when it happens, not if, when, what do you think the government will do? Let the banks fail, break them up, prosecute the criminals, or bail them out again. Bigger bailouts, more secret lending, more wealth transfer, more foreclosures, more ordinary people destroyed while bankers get richer. You already know the answer because you've seen this movie before, and the sequel is always worse. So what do? How do you protect yourself when the system is rigged against you? How do you survive when the next collapse comes and the bailouts flow to banks while you lose everything? First, acknowledge reality. The government will not protect you. The regulators are captured. The politicians are bought. The system serves wealth, not people. Once you understand that clearly, you stop expecting rescue from institutions designed to extract. Second, minimize exposure to the banking system. Don't trust banks with more than necessary. Diversify assets outside the financial system. Physical assets, skills, community relationships, things that maintain value when the digital numbers evaporate. Third, prepare for the next crisis because it's coming. The debt is unsustainable. The leverage is extreme. The derivatives are massive. And the people running the system learned from 2008 that they can crash the economy and get reward. So they're going to do it again. Bigger, worse, more catastrophic, and you need to be ready. But honestly, individual preparation isn't enough. The system needs to change. Banks need to be broken up. Too big to fail needs to end. Glass-Steagall needs to be restored. Criminal prosecutions need to happen. The Federal Reserve needs to be audited, regulated, or abolished. The entire corrupt structure needs to be torn down and rebuilt on principles that serve people instead of parasites. Will that happen? Not without a fight. Not without mass awareness. Not without millions of people understanding what happened in 2008, getting angry, and demanding justice. That's why they keep the 16 trillion secret. Why they focus on the 700 billion, why they called it a rescue instead of a robbery. Because if enough people understood the truth, the whole system would lose legitimacy. And legitimacy is all they have. If this has shattered your illusions, if you're feeling that cold rage that comes from realizing you've been robbed repeatedly and legally, then hit subscribe right now, because what we're revealing next makes 2008 look small. We're exposing the next planned crisis. The endgame, central bank digital currencies, the death of cash, total financial control, and how 2008 was just a rehearsal for what they're planning next. This isn't conspiracy theory. It's documented policy. And the timeline for implementation is now they bailed out banks with $16 trillion while you lost your home. That was 2008. What they're planning for the next crisis, it's not a bailout, it's a takeover. Complete, permanent, inescapable, and the window to stop them is closing faster than you think. So choose. Keep trusting a system that's robbed you repeatedly. Keep believing the lies. Keep playing the rigged game. Or wake up, fight back, build alternatives, and prepare for the moment when this century of fraud finally collapses under its own corruption. The next crisis determines everything. Whether you're a free person with rights or a serf with privileges that can be revoked with a click, the choice is yours, but make it now because they're not waiting. And neither should you